Good morning, everybody. Subhash Chandra at Benchmark Company. I cover energy here. Today we have with us one of the largest fast charging companies in Europe, which is the second fastest growing EV market in the world. And we have with us a couple of gentlemen from Allego, but I don't think my introduction, quite does it justice. So, Ton, if you want to give us a couple of minutes on the background of your company, thank you.
Sure, happy to, Subhash. Good morning, everyone. Happy to be here. Ton Louwers, CFO for Allego. I've got with me my very good colleague Alexi, our CTO, Chief Technology Officer, and together we'll be answering some questions on ESG today. So just a quick overview of our company. We incorporated 2013 as part of a Dutch utility provider called Allego. So we know a bit about power and energy. It's in the genes of the company. Originally focusing on early stage market conditions, so slow charging, level 2 charging, which today is still the majority of our charging network, but rapidly now moving towards fast and ultra fast charging, as we think that's the biggest growth area of the market going forward. We're active in 15 countries today, solely in Europe. We run around 34,000 charging ports, have invested heavily in our own proprietary technology, both on site selection as well as operating our charging network. Last year reached $100 million revenue with positive operational EBITDA of 9.2 million euro, and have been listed at the New York Stock Exchange as of March 17 this year. And I can share with you that's been quite an adventure so far. So very happy to be here together with Alexi and answering all kind of questions that you might have for us on the topic.
Could you give us background on Europe? And I think we see from some of the sales data, the vast adoption of EVs into the European market. But could you perhaps fill that in for us in terms of legislation and sort of the regulatory framework that is leading to that adoption above and beyond just customer preference for EVs?
Yeah. Sure, Alexi, you take this one, I'll take the next one.
Yeah, I can take that one. Europe is a heavily centralized country, not country, union, I would say, which in some way is more centralized than the US. And there has been a project law discussed between the European Parliament and the states. And they have come to, I would say, an agreement beginning of July. First, there was a vote of the Parliament, end of June, and then beginning of July, the states voted in favor of a complete fuel car ban in sales in 2035. So it means that from 2035, it will be forbidden in Europe to sell fuel cars. So that means that from the current EV sales penetration, which is around between 18 and 20% on average at the European level, we are going to 100% EV sales from 2035. So I would say that's the first level. And on top of that, some large cities like London or Berlin or Amsterdam have already taken some measure to ban the fuel car use within this large city earlier, as early as 2030. So this all drive to a very, very strong increase of the EV sales and the EV penetration. And the OEM, the automotive manufacturer, have well understood that. And several of them have announced that from 2030, they will completely stop selling fuel cars in Europe. I can take the example of Daimler-Benz or Audi, for example, or Stellantis or Volvo. So we are ahead of a really big push towards EV in Europe.
How would you describe your European presence, and do you look at that your engagement in Europe on a country-by-country basis, or there's some sort of TransUnion type involvement that you might have? Where do you think your presence is the strongest?
I think Europe, like Alexi said, it's a bit decentralized, right? So we are present in 15 European countries. So it's almost a country for country by country approach in a way, and really localizing our presence and our way of working. So that's how we look at it. If you look at Europe as a whole, I think see what's going on in terms of maybe mainly energy transition. What Alexi just described, the complete ban by 2035 on the sale of ICE cars is a big one, of course. We are well positioned, we feel, in that field. Obviously we supply electricity. With everything that's going on in the world, there's an acceleration of a move towards electric driving. So there's a huge appetite. There are more and more new models coming to the market, which we obviously also benefit from, and that will also only be accelerated from this. If you look at the projections from BNEF or Bloomberg, for instance, 40% of all car sales by 2025 will be EV, even going up to 60 by 2030, and maybe with this ban by 2035. I think we can say that 100% of all new cars sold will be EV, maybe also hydrogen, but certainly not ICE cars. We supply more than 400 million green kilometers already in 2021. If you were to convert the energy sold to the kilometers driven, and on top of that, I think we're working currently on PPAs, so power purchase agreements, really to get direct access to the renewable farms for a long term, making absolutely sure that everything that we do is completely renewable. Today's energy is already green certified, but with these PPAs, we'll have direct access to these farms. And I think the final thing to mention here for us is that we're also eligible for so-called carbon credits, as we also help reducing CO2 emission through our network. So, and that's doubling almost year on year also going forward. So I would say well positioned in the different countries where we really focus on local circumstances and being part of the local way of working, but certainly also benefiting from everything that's going on in Europe through our network.
Could you describe the Mega E that you looks like was recently purchased? Seemed to be I guess a private equity backed venture with a core partner of yours, and this I guess gives them sort of puts it on into the public world through Allego and them taking shares and so on. But it was a material increase, to your number of chargers out there. Could you just sort of describe that, and if there's any other such ventures, as you look in the future?
So on Mega E, the inception of that program actually went back to before Meridiam acquired the company. But Meridiam was one of the partners we were back then, and I wasn't there, so it's just history telling here, but we were talking to already. So when Meridiam acquired the company, it made a lot of sense to continue with them. The strategy back then, we were loss-making, quite heavily organized, was to be asset light, and Meridiam, through their expertise and experience, taking care of the investment side. So what we actually did together is we built a SPV structure, asset co structure, where we were supplying actually all of the services. So we did all the installation, we did all the location contracting, did the operation and the maintenance for Mega E, because the entity was actually also called Mega E. Different asset codes in different countries. And then with the change in strategy and the upcoming IPO, it was agreed that we would have an option in place to buy back all of those assets that we built and operated and found for Meridian here. And that's been executed now. And fully part of the Allego network. I mean, it was more kind of a technical exercise in a way. We know these sites very well. They're premium sites. You know, we found them with the technology in place. So we agreed very quickly to do that, and very happy to have that in our network, because that's more than 100 fast charging sites, ultra fast charging sites actually, part of the European program, so also eligible for subsidy there, and fully benefiting from the European Union's program here.
Mm-hmm. So a lot of the electricity market has been fast moving in Europe, you know, no small part because of, you know, the Russian invasion. When you sort of see what's happening here in the last perhaps week or two, power prices reacting, of course, to natural gas, but new plants scaling back in to the generation mix, at least in some of these countries, you know, specific to Germany, I guess, where you do have some fast charging networks, and it seems like rapidly growing fast charging networks. What can you say to the pass-through of those power costs, and you sort of seeing any sort of change in driver behavior as you pass it through?
You want me to take that one? Maybe I will enlarge a bit the answer on that. First, I would say that we have started to work on a strategy to mitigate a potential risk on the electricity market as early as 2020, when we decided to acquire some technology to enable us to buy directly on the market and to become our own supplier in Germany, Netherlands, and soon in France. And this is the technology which enables us today to conclude the PPA that Ton has just mentioned, where you buy at fixed price, which is, by the way, much lower than the current market price, on a long term. So this is the perfect way, as we are expanding our energy sales, really to fund our growth on something which is very stable. So I think that's very important to take into consideration. What we have observed in the recent months is due to two facts. First, the war in Ukraine, but also the lower availability of nuclear energy, and especially in France, since autumn 2021. So facing that, facing an increase of the electricity market, as you rightly put it through, we have adopted a pass-through, I would say, commercial practice, which means that we increase our prices. The first thing to say is that we have up to now increased our prices, I would say, following our competitors. So we are not the most expensive. So all our competitors have increased first their prices, and then we have followed. So we try to be careful in terms of prices on the market. What we have observed at the moment is that there is no effect on the uptake. On the contrary, we continue to see the utilization rate, which is our key metric, which is the number equivalent to the number of sessions that we have on a daily basically from since last year. We are already at 9%, which is well above the plan that was presented to the investors last year. So I would say that after the price increase of 17%, which is quite dramatic at the beginning of the year, we feel very confident that we will be able to apply the same strategy in the future. On top of that, we have in Europe a much more favorable situation than in the US, which is a comparison with the fuel price at the gas station, which is actually much in favor of EV charging, even on ultra-fast chargers, because the fuel is heavily taxed in Europe, and we are at the moment at gallon which are more than $10 per gallon at the gas station. So we have probably a price advantage, a cost advantage in terms of TCO of 20 to 25% in favor of EV charging versus normal fuel car.
The green financing market, it's scaling. It's, you know, and we've seen transactions there. Can you describe your participation in it and how you see it as an advantage, if at all, in financing your growth going forward? Because, you know, the growth you've achieved in fairly short time has been, you know, exceptionally strong. And even if we look out 12 months, it's quite a bit more. Can you talk to, you know, alternate financing strategies?
Absolutely. I was waiting for that question. So the you know what I think in general the financing markets, especially also debt financing, project financing markets in Europe are pretty sophisticated, and in a way I think also a bit more mature than in the US, relatively to the US when it comes down to EV. So that's where we are, also given the development of the market. I think the thing to point out here, and also for us to build upon, is the transaction that we closed last year together with Meridian, you know, which was a complete non-recourse debt structure, completely built on the future cash flows of the assets. And as far as we know, the first one of its kind. It's completely green labeled. It's a green loan. It has very attractive rates that we also disclosed. So Euribor plus 3.5%. And like I said, the first of its kind, with a 40% leverage to build out the entire Carrefour network in France. And I think this illustrates our ability to raise third-party capital and expand our network on. You know, and it's also something that we really see us using going forward. There's a huge appetite in the European market for these kind of structures, especially you know, as they are completely green certified and labeled with our assets. So for us, this is one of the big financing options going forward to fund everything that we need to build out the entire plan to 2026. So you know, we're very excited about this and are working also very hard with our banks, with our lenders, with all of the parties in the market to pull more of these structures off.
This is the ESG conference, I guess. So specific to ESG, you talked about the PPAs with renewable power providers. Can you speak to the other ESG, direct ESG, you know, policies you might be implementing company-wide and throughout Europe, other than power procurement?
Yeah, maybe Ton will complete, because this is a very wide question. I would say that the first thing is that we exist, and you know, our business, which consists in expanding the use of EV, and especially through the fast and ultra-fast charging network, which enable long distance traffic, which enable much more people in Europe to own and to use an EV. For example, even if they don't have a parking place or a driveway, so no possibility to charge at home, well, thanks to our station, they are able to charge their car fast in a very, I would say, nice manner, because we choose a premium location for that. So really, I would say the Allego expansion contribute to the expansion of the EV penetration in Europe, and therefore to the reduction of the emissions. So I would say that really this is the first point. On top of that, we have decided on the ESG matter to engage quite strongly, and we are already certified ISO 45001, which is the health and safety norms. And we have done the same in terms of environment respect with the ISO 14001. We are also certified, so we're quite heavily certified, which means that we have today a management system which take into account for all decisions the ESG aspect. More importantly, maybe we observe that Allego staff, and not only the management, is extremely motivated by that, which is very important for us. And we recruit more and more people who join Allego because they are convinced that this company contributes to an improvement globally of the environment. And I think that's a matter of proudness for ourselves to be part of this company. So there are plenty of action which result from that, but I think that's the big frame I wanted to describe. I don't know, Tony, if we want to add some points.
Yeah, I'll add something. You know, Subhash, what you notice is that ESG for us is with a big E, and you know, and that's obvious, of course. We're right in the center of energy transition and in let's say renewable energy supply. So it's only natural, I think, that we have a strong focus on that. When it comes down to the S and the G, obviously we practice good governance. You know, being listed in the US but being a Dutch company makes us actually subject not only to US regulation but also to the Dutch Corporate Governance Code, for instance, on which we have to report and also will report. We'll do that for the first time on our 22 account. So you can bet on that. On the social side, you know, we obviously take our fair share in making sure that young people can actually learn the trade, and you know, so we have a lot of apprentices also running through our programs, and we also participate in making or helping actually people that are a bit distant from the labor market to whatever due to whatever reason, coming back into workforce. It's in the Netherlands we have a Step to Work program for that, and actually some of our people today come from these programs. So again, a big E and maybe a smaller S and G, but we're not completely ignorant for that, and also understand going forward that we need to emphasize more on that as well next to the big E. So big E, big S, big G going forward.
Mm-hmm. How do you think of compensating or making direct sort of compensation within Allego to the ESG performance? Is there such a framework today, and do you think of implementing one?
Well, I think the more formal answer is that that's up to our board of directors, and again, you know, recently being listed and everyone being newly in place, they are getting their arms around also these kind of topics. But I expect that to happen, quite frankly, and you know, indirectly, of course, we are kind of compensated for that through the performance on a daily basis, because you know, we want to obviously generate high revenue, high margins, which means that we need to sell a lot of green kilowatt hours. And so indirectly we are incentivized or compensated for that, but there's no strict policy in place yet on KPIs or such thing, if you want to, if you mentioned that, but I actually expect that to come, quite frankly.
In Europe, regulations, how much do you see it as a net benefit? You know, how much of a tailwind do you think the European, you know, regulatory regime is? And, you know, is there a point where you feel that the business has a momentum, that entire, you know, ecosystem has a momentum that can exist outside of subsidies and regulation?
I'll kick it off, and Alexi will jump in. Alexi knows a lot about the regulatory side. I'll talk a bit about the incentives, because I think that it's not exactly the same. So what we have seen from day one in the Netherlands and also in Norway is that EV driving has been stimulated heavily through tax incentivization, right? So, and that obviously worked out because the Netherlands and Norway has always been the front runners in terms of EV adoption. What we actually see now is that it's still there, but it's not necessary anymore. We see next generations coming in. I see that at home with my 2 daughters as well. They are, of course, they're interested in tax incentives with a father like me. But there's a general implicit conviction that it's better to drive EV than ICE cars, and I think that's what we will start seeing more and more. And next to that, in general, people also, like Alexi said, if you look at the cost of fuel here, it's immense. So charging up a car is actually cheaper, and the TCO from an electric car is coming down rapidly. On our side of the incentives, and we also disclosed that on numerous occasions in the presentation we held, is that we are eligible for some incentives, like the carbon credits, but also the European subsidies on Mega E, for instance, one of the 4 programs that we secured in the past. But we don't need them. So if they were to be taken away, for us, it wouldn't be a problem. Our business cases are very solid, always calculated without these incentives. So if they go away, fine with us. We will still have a decent margin. And maybe on the regulatory side, Alexi, you can.
Yeah, just in a quick word, it is done. It's done. The future is known. Since we have this agreement between the member states and the parliament, which took place beginning of July, we know that there is an horizon of 2035 where IC car will be banned. So we can already draw the line. And there are 250 million vehicles driven in Europe, personal vehicles. They should be all replaced by 2045, 2050, which consists in a multiplication of the market by 50 up to that period. So I would say there are no longer questions. If you observe the adoption of this directive was not followed by any outcry of the OEM, everybody has integrated that 2035, this is the end of the fuel car, and we move almost 100% to EV. And why that? There could be some use of alternative fuel like hydrogen. It will be marginal because the OEM plus the infrastructure builder like us don't have the time now to change. So we are going full speed into electric, and that's the future, the next future of Europe. That's very clear now. There is no doubt.
Okay. New technologies in the space. What do you see coming, and how quickly can these technologies be adopted? I imagine there's some obstacles, whether supply chain or inflation or just consumer appeal. But give us a view of what's coming.
I think we don't expect a huge revolution, but the first point, which is the most important from the driver point of view, is really an expansion of ultra-fast charging with progressively new generation of charger arriving. We are already deploying currently the 2nd generation, which is more efficient, which is more user-friendly, which is also more modular, which is very interesting in terms of investment. You can start by investing in a 150 kilowatt and upgrade it to 300 progressively. It's also less costly in terms of maintenance. And we are currently starting to test some, I would say, a new generation of charger, which will be even more efficient, more improved. But basically, I think the most important is that the first point is ultra-fast charging will expand with more efficient and more user-friendly technology. The second one is plug and charge. Plug and charge enables you to arrive at the charging station. You just take the sockets, you plug it in your car, and it starts charging, and the payment will take place without having you to play with various MSP cards or credit cards and so on. So a much simpler and seamless experience. We're going to deploy that next year. So we are heavily starting and will be with the full implementation among the first to work on that. And we work with the OEM to achieve that performance. In terms of personal vehicle, we see that's a direct consequence of the energy crisis, a much larger use and need of what we call smart charging. Smart charging is, I would say, a word which include a lot of different aspects. For us, the most important is to be able to accommodate grid constraint at a local level. So it can be load balancing on a site where we own our own technology, or on a much larger scale to, for example, several hundred of sites in a specific region, which can be managed jointly in terms of the energy management. And we are very well in advance to do that. And for us, that's a necessity because we are going to have more constraint on the energy side. The last point, and related to that, is the use of battery that we start to test in order, even if you have a low power grid connection, to be able to provide the full high power charging or ultra fast charging experience to the driver, even if you don't have the necessary grid connection. Last point that we see coming in terms of technology, what I would call a mega charging for trucks with a super ultra fast charger in the range of 1 megawatt. And that's coming probably for deployment in 2024.
Anything on the software side?
Well, I would say that everything, all the point I've mentioned, whether smart charging, whether plug and charge, is supported by a strong investment into the software. And as you know, we own our own technology, we own our own platform. And obviously, the energy management, I mentioned it earlier, this is a very important enabler to be able to manage, for example, smart charging, PPA, and so on. So that's the background of all the point I mentioned is software.
And then finally, you have a services business that, I think is still a significant portion of the company. May diminish as we go forward. But how is ESG from your customers, where you install and chargers? How do you see the ESG momentum for these big customers? Carrefour, for instance, being an example.
I think you mentioned it correctly, Sebastian. There's a big momentum, and it's accelerating. Carrefour is a very good example of that. They obviously want to be able to offer to their customers the possibility to charge up their car. Also, with the ESG thinking in the back of their head, obviously these are also commercial companies, so they also want to make sure that people keep coming to their premises. So I think there's both direct and indirect involvement. We see that a lot. I would be lying if I said that there's not a business purpose to a lot of these companies to make it happen. But I think there's also a growing awareness that they have to contribute to the transition as well. So I think if you talk about ESG, it's not just a topic. I think it's increasingly becoming seriously on top of mind of people. Maybe not always as explicit as we talk about it here, but also less explicit. Everybody is certainly to what's happening around us here in Europe, in particular. Worried about energy deliveries and the ability to go forward with that. So it's everybody wants to contribute in a way, but also make sure that that there's continuity on all kind of levels. So, and again, that's a lot about the E part of the equation, but it's only natural that there's a lot of focus on that. And again, also if I look around in Europe, also in our companies, there's a lot of social awareness as well, making sure that we also make sure that others around us can benefit from our success and from our wealth in a way. And good governance only glues it all together, because otherwise everything falls to pieces anyway. So, our typical customers there are in almost all cases blue chip companies. So they are aware of this, and they're fully committed to this.
Okay, terrific. Well, Ton, Alexei, those were all the questions I had. Did you want to conclude with any final thoughts?
No. I'm fine. Alexei, maybe you?
No, I need to also jump to another call. I'm sorry about that.